Dear friends, today we are going to learn partnership accounts. Friends, today we are going to try some problems on partnership, goodwill, valuation, and accounting treatment. Friends, as you know, the accounting treatment of goodwill and the valuation of goodwill is a very significant adjustment in any problem on partnership accounts. When we do problems on admission or retirement or death, you will come across this goodwill adjustment in almost every problem. Sometimes they'll ask you to find the value of goodwill and then do the accounting for that. So you cannot avoid this at all. Probably you may not learn how to prepare a P&L appropriation account. Sometimes it may not come also. But one thing which you cannot avoid in any problem on partnership accounts is the accounting for goodwill, and in some problem they ask you to find the value of goodwill also. So therefore, we are going to see two problems, one on valuation of goodwill, the other one not only valuation but also the accounting treatment of goodwill, and how to prepare a balance sheet of the firm after making adjustment for goodwill. These are the things you are going to see in these two problems. Let's now take the first problem, which is not a very difficult problem. We will just focus on how to value the goodwill. Problem number 1. The following particulars are available in respect of the business carried on by Rajesh. So they are given the complete data about the problem, whatever we are going to do. Capital invested is 3 lakh. Trading results 2013 profit of 80,000, 14 profit of 72,000, 15 loss of 12,000, 16 profit of 1 lakh. So you find in this problem the profits keep varying. 80 became 72, then there was a loss, again suddenly it shot up to 1 lakh. So it is not showing any particular trend. You have to understand that, because when the profits of a business is showing a particular trend, either increasing or decreasing, you will have to go for weighted average profits. But in this problem, first year 80, then it got down to 72, then loss of 12, again it went up to 1 lakh. So there is no any specific trend shown in the profits in this situation. So Rajesh has invested a capital of 3 lakh, and the results of the last 4 years are given to 80, 72, minus 12 and 1 lakh. Then the market rate of return on investment is 12 lakhs. Risk return on capital invested in business is 3%. 12% and 3%. What is the meaning of this? Market rate of return on investment 12 lakhs. That means if this money of 3 lakh was invested in the market in some other investment, Mr. Rajesh would have got a return of 12%. Market rate of return on investment. The 3 lakh invested in business, had it been invested elsewhere, the return would have been 12%. Number 1. Number 2. Rate of risk return on capital invested in business is 3%. If the money is invested in any other investment, they would have got 12%. But they are investing in a business. You know, when you invest in a business, an element of risk is there. In order to compensate the risk, we have to earn more than the market rate. Then only we can continue to carry on the business. We can be more productive. We can be more profitable. So if I earn only the market rate of investment, I don't have to do a business. I can simply put the money in the market, earn that interest. I don't have to bother about the risk involved in a business. But when I put my money in a business, I know I'm going to get a better return. But I also know that I have a risk involved in the business. In order to compensate the risk, I should earn more than that. Therefore, I should not earn just 12% whatever the market rate. I should earn plus 3%. Therefore, the normal return expected on my investment will be 15%. 12% plus 3%. Remuneration from alternative employment of the proprietor if not engaged in business. See, Mr. Rajesh was actually working in some other business, it seems, some other company, it seems. He was getting a remuneration of 12,000 per annum. So don't worry about the numbers. It is just to understand the concept. 12,000 per annum means what? 1,000 per month. Whoever is getting salary 1,000 per month nowadays. But we don't bother about the numbers. Focus on the concept. Remuneration from alternative employment of the proprietor, 12,000 per annum. What is the meaning of this? Mr. Rajesh has invested 3 lakh in the business, but earlier he was working as an employee in some other company. From that company he was getting a remuneration of 12,000 per annum. Now when he starts a business, will he be able to continue that employment? Not possible. That means he will be losing that 12,000 rupees income. So this business will get him a return of 15% on the capital employed. But on the contrary, he may not get the 12,000 rupees remuneration from alternative employment. That also should be factored in to calculate what will be the value of the goodwill. Now, how to find the value of goodwill? You know there are different methods of determining the value of goodwill. Average profit method is there. Super profit method is there. Annuity method is there. Capitalization method is there. We have to see which method they ask in the question. We have to do that. You understand? Let us see in this problem what is the method they have asked you to determine the value of goodwill. You are required to compute the value of goodwill on the basis of 5 years purchase of the super profit of the business calculated on the average profits of the last 4 years. So last 4 years average profit is given. Based on that you find the super profit, multiply that by 5, you will get the value of goodwill. Now therefore what we should do? First we have to find the average profit. For that purpose, the profit loss of the last 4 years are given. Very simple. Since the profit is not showing any definite trend, we have to go for average, simple average. So add all the numbers. If there is a loss, you deduct it. Divide by number of years, you get the average profit. That is number 1. Number 2, find the normal profit. What is normal profit? If this money was invested in the business, otherwise in any other investment, what could have been the return? It could be 12%. But by investing in the business, you are exposing yourself to risk of 3%. So therefore, for the money invested of 3 lakh in this business, you are expected to earn a normal return of 15%. That will be your normal profit. You have to compare the average profit with the normal profit. If the average profit is more than the normal profit, that means you are making an excess profit. That excess is called as super profit. That super profit you multiply by number of years, you get the value of goodwill. Simple. In this problem, you have to calculate the average profit, you have to calculate the normal profit. But in this problem, they have also given one additional information. What is that? The proprietor was working in another company and was getting a salary of 12,000 per annum. So that also has to be considered as an adjustment to determine what is the profit he should normally earn. So using that also you have to find out what is the super profit. So what you should do? Average profit minus remuneration from alternative employment. That is the profit which you can earn from the business. But what normally is earned from the business? Capital employed multiplied by the rate of return. That is 3 lakh into 15%. That is a normal profit he is expected to earn. Compare the average maintainable profit after adjusting for alternative employment remuneration. If the average profit is more than the normal profit, the difference is positive, you call it as super profit. You multiply that by number of years, in this case it is 5, you get the value of goodwill. Sometimes when you do a problem on super profit method, the average profit or the average maintainable profits may be less than the normal profit. Then the answer will be negative. Super profit is equal to minus 40,000. Like that you will get. Immediately don't conclude he made a super loss. There is nothing called super loss and all. Super profit is the profit which they earn more than normal. They are actually making a profit. So there is no question of super loss. If the difference between average and normal profit is negative, then you have to say the value of goodwill is nil. The business does not have any goodwill at all. If it is positive, then we call it as super profit. That is multiplied by the number of years given in the problem. We will get the value of goodwill. Okay. Sometimes in the problem, the number of years of purchase may not be given. Here it is given 5 years purchase. Sometimes it is not given. Then what I should do? Either I can assume it as 1 year or as 3 years. But whatever assumption you make, you better write a note for the answer. You say the number of years of purchase of goodwill is taken as 3 years or 2 years or 1 year. Then you find the value of goodwill. So that is how we are going to solve this problem, dear friends. It's a very simple problem, but there is a possibility we make mistakes on simple problem only. Clerical mistakes we make, we don't consider certain things. Particularly in this problem, people will not know what to do with this 3%. They will simply apply 12%. What is the 3%? Some risk return given, what I do not understand, like that, they have a problem. In other cases, some student may not bother about this 12,000 per annum. For what I should take this 12,000? What is adjustment to be done? Some students may not know. So that is why we are doing this problem in the classroom. Please listen carefully. Let's go to the Excel sheet to see how the solution is done for the problem number 1 on goodwill. Friends, now we will see how to solve the problem on goodwill. Problem number 1. Very simple problem. Just to find the value of goodwill by super profits method. As I told you, while we are discussing the question, find the average profit, then the average maintainable profit, compare the normal profit. If average profit is more than normal, the difference is super profit. Multiply by number of years, you get the value of goodwill. That's all. Easy problem. Let's start. Calculation of value of goodwill, super profits method. So what is the first step? We have to find the average profits of the last 4 years. 2013, 80,000. 2014, 72,000. 2015, that is minus 12,000 loss, and 2016, 1 lakh. Since the profit does not show any trend, either increasing or decreasing, it just goes up and down, zigzag motion. So therefore, we'll have to go for the simple average. So find the total. This is the total profit for the last 4 years. Find the average. That means you have to divide 2,40,000 by 4. So the average profit is 40,000 rupees. But remember, the proprietor Rajesh was working in a company earlier. From that, he was getting a remuneration of 12,000 rupees per annum. We call it as opportunity loss or opportunity cost. By moving from employment to a business as a proprietor, he will be getting profits from the business. But on the contrary, he will be losing the remuneration as an employee in a company. So that loss has to be adjusted in the profit that he will earn. He will be getting an average profit of 60,000, wonderful. But will he get that salary of 12,000? No. So that has to be adjusted to determine the value of goodwill. So, what is the remuneration from ordinary employment? 12,000 rupees. This he will not get. He will get 60,000 average profit, but he won't get the 12,000 rupees. Therefore, from the business, he is expecting to get an average maintainable profit of 48,000. Against this, we have to compare what is a normal profit. How to get the normal profit? Very simple. Capital invested should be multiplied by normal rate of return. Capital invested 3 lakh is given in the question. What is the normal rate of return? As I explained in the question itself, if the 3 lakh was invested in the market without any risk, there is a return of 12%. He will get 12% return from the 3 lakh. But since he's invested the money in a business, he's exposed to risk, external risks are there. For compensating the risk, he's supposed to earn another 3% also. Therefore, total expected return from the business is 15%. So, the normal rate of return is 15% on an investment of 3 lakh. We have to find out what is the amount. So, normal profit, how much? 3 lakh, that is capital invested multiplied by 12% plus 3%, that is 3 lakh into 15%. So, the normal profit is going to be 45,000. So, he is expecting to earn 45,000 normally, but from the business he is going to get 48,000. That means he is going to make an excess or a super profit of 3,000 rupees. Is it positive? Yes. So, if the super profit is positive, then you have to multiply that by the number of years to find the value of goodwill. How many years according to the problem? According to the problem, it is 5 years. Therefore, multiply the super profit by 5. You will get the answer for goodwill. Super profit into 5, 3,000 into 5 will be 15,000. That is the value of goodwill. So, friends, as I keep telling you, it's a very simple problem. First, to find the average profit, which is 60,000. Deduct the opportunity loss, 12,000, which he will not get from the employment in future. So, he is expecting to earn a profit of 48,000 from this business. But normally, the investment in this business will fetch him a return of 45,000 rupees only. So, by investing in this business, he is getting an additional profit of 3 lakh. That 3 lakh is known as super profit, which you have to multiply by the number of years of purchase. What is given in the problem is 5 years. Multiply the super profit by 5. You get the value of goodwill, 15,000 rupees. Very easy problem. It will be a part of a bigger problem. I don't see this coming as a separate question in the exam. If at all, an examiner is very lenient, probably he may ask this question for maximum 4 marks, because you won't take more than 5 minutes to do this problem. But remember, the normal rate is 15%, not 12%, and the remuneration from ordinary employment should be deducted to get the average maintainable profit. If you do these 2 adjustments, then you get it right. Of course, you have to do the calculations correctly. Otherwise, problem is a very simple problem. This is how you get the value of goodwill by super profit method. Friends, very easy problem. I hope you understood. Welcome to Veranda Excel. Friends, we are now going to see another problem on partnership, valuation and accounting treatment of goodwill. Unlike the problem number 1 on goodwill, this is a slightly different problem, comparatively difficult also, because in this problem we are going to find the value of goodwill and then we are going to do the accounting treatment of goodwill also. Let us see how it goes. Let's see the problem. Following is the balance sheet of Bajaj and Girish as on 31st December 2020. They have given you the liabilities and assets. Trade payable 60,000, capital accounts of Bajaj 75,000, Girish 60,000. On the asset side, cash at bank 30,000, sundry assets lakh and 65,000. Let's see what happens. They share the profit loss in the ratio of 6:4. On the above date, Anil was admitted as a partner on the condition that he would pay 60,000 as capital. Goodwill was to be valued at 3 years purchase of the average of 4 years profits. So you are admitting a new partner. On account of that, new partner is going to bring 60,000 rupees towards his capital, and you're also going to find the value of goodwill, which will be average of the last 4 years profits. So let us see the profit of the last 4 years. 2017, 27,000, 18, 42,000, 19, 36,000, 2020, 39,000. Do you find any trend here? Yeah, 27 became 42, 42 has become 36. That means the profit goes up and down. So we have to follow only simple average method, not weighted average method, for the purpose of valuing the goodwill. The new profit sharing ratio is given as 40:30:30, that is 4:3:3. After admitting the new partner, they are going to share a ratio of 4:3:3. They are asking you to give the journal entries for goodwill and prepare the balance sheet. So this is a problem which can carry around 6 marks in the examination. Number 1, you have to find the value of goodwill. For that purpose, find the average. Multiply by so many years. I think it's 3 years in this problem. You multiply, you'll get the value of goodwill, number 1. So that is the first calculation you have to do. Number 2, you have to give the journal entries for goodwill. On account of admission of a partner when the goodwill is valued, how to account for goodwill? You understand, always the goodwill, whether it is admission or retirement or death, always the goodwill is to be accounted by adjusting in the partner's capital account in the ratio of gain and sacrifice. The sacrificing partner's account should be credited, the gaining partner's capital account should be debited. In case of admission of a partner, normally the incoming partner is a gaining partner and the old partners are the sacrificing partners. So therefore, it will be debit the new partner Anil, credit the old partners, namely Bajaj and Girish. In what ratio the old partner should be credited? In the ratio of sacrifice. How to find the sacrificing ratio? We know very well the formula for sacrificing ratio, old ratio minus new ratio. The old ratio is given in the problem, 6:4. New ratio is also given, 4:3:3. So you can easily find out the sacrificing ratio of the old partners, Bajaj and Girish. In that proportion, the goodwill due to the new partner, the share of goodwill of the new partner shall be adjusted in the accounts of the old partners in the ratio of sacrifice by applying the formula old minus new. So valuation of goodwill should be done. We have to calculate the sacrificing ratio. Then we have to make the journal entry for number 1, capital brought in by the incoming partner, and also for the goodwill adjustment. After doing all this, you are asked to prepare the balance sheet of the firm, including the new partner after admission. So 3 or 4 things you have to do: valuation, calculation of sacrifice ratio, journal entries for capital and goodwill, then balance sheet preparation. It is not a very difficult problem compared to the other problems on admission. Lot of other adjustments would have been given, revaluation would be given, reserves transfer, capital adjustment, nothing there. Only goodwill adjustment is there, capital brought in by the new partner is there. After making all these adjustments, you are asked to prepare the balance sheet of the firm. So it's not a difficult problem, friends, but it is not as easy as the first problem. So it takes some time. Probably they may give you around 8 marks for a problem like this in the examination. You can take around 15 minutes to solve this problem. Let's now go to the Excel sheet to see how to solve this problem. Yeah, friends, now we will see the solution for problem number 2. As I explained in the question, this problem we have to find the value, we have to find the sacrificing ratio of the continuing partners, all partners. We have to make the journal entry for capital as well as goodwill, and then finally we have to prepare the balance sheet of the firm. Is it not? Okay. So let's start now. Determination of value of goodwill. What is the method given in the problem? Average profits. Now, whether you will follow simple average or weighted average, it depends upon the tendency of the profit. If the profits show a continuously increasing trend or a decreasing trend, we have to go by weighted average method. But in this problem, you see, first year profit is 27,000 and it goes up and comes down and keeps on, alternating between top and bottom. So therefore, we need not go for weighted average, we have to go for simple average method only. So therefore, just add the profits of the 4 years, divide by 4, you will get the average profit. Simple formula, 27,000 plus 42,000 plus 36,000 plus 39,000, 4 years profit divided by 4 will get you the average profit. So therefore, what is the value of goodwill? According to the problem, goodwill should be valued at 3 times of the average profit. So 3 into 36,000 will get you the value of goodwill of the firm. This is the goodwill of the firm. But we are admitting a new partner, and for that purpose only you are valuing the goodwill. So we have to find out what is the new partner's share of goodwill. Now we will see what is Anil's share of goodwill. The total goodwill of the firm is 1,08,000. But since you are admitting Anil, we have to account for Anil's share of goodwill only. You know, Anil is given 30% of the future profits. So 1,08,000 into 30% will get you Anil's share of goodwill, that is equal to 32,400. Now, we have calculated the value of goodwill, we have determined the incoming partner's share of goodwill. Now friends, we have to make the journal entries. Journal entries for what purpose? Number 1, capital brought in by the new partner, 60,000 rupees. We have to make entry for that. Then we have to make entry for Anil's share of goodwill. See, when a partner is admitted, you may ask the partner to bring cash towards not only his capital but also his share of goodwill. But in this problem, there is no information about whether he brings any money towards his share of goodwill. He brings money only for his capital. So therefore, the capital brought in by Anil will be recorded in his credit, whereas Anil's share of goodwill will be adjusted in the capital accounts of the other partners in their sacrificing proportion. So let us see what are the journal entries. Number 1, for capital brought in by Anil, cash or bank account debit 60,000 to Anil's capital. How much? 60,000. The reason being capital brought in by Anil. Easy one. Next journal entry is for recording Anil's share of goodwill. As I told you, Anil has not brought any money towards the share of goodwill. Therefore, in the event of admission of a partner, we have to debit the incoming partner's capital and credit the old partners in their sacrificing proportion. Therefore, we have to debit Anil, incoming partner, credit Bajaj and credit Girish capital. In what ratio? Anil's share of goodwill is transferred to the old partner's account in their sacrificing ratio. But what is the sacrificing ratio? See, Anil's share of goodwill is 32,400. But this is to be credited to Bajaj and Girish in the ratio of sacrifice. What is the sacrificing ratio? Not given in the question. We have to find out. We know the formula to find sacrificing ratio. What is that? Old ratio minus new ratio. So what is the old ratio of the partners? 6/10 for Bajaj and 4/10 for Girish. What is the new ratio? The new partner comes in. What is the new ratio? After admitting the new partner, Bajaj's share will become 4/10. Girish's share will become 3/10. So the formula for sacrifice is old minus new. So 6/10 minus 4/10. So Bajaj's sacrifice is 2/10 and Girish's sacrifice is 1/10. Old minus new is the formula. 6/10 minus 4/10 for Bajaj, 2/10. 4/10 minus 3/10 is 1/10, that is Girish is sacrificing. Therefore, this 32,400 should be credited to Bajaj and Girish in the ratio of 2:1. So 2/3 of this will go to Bajaj, which is 21,600. Girish will take 1/3 of that, is 10,800. So friends, we have now done three things. Valuation of goodwill is over. We have determined what is the new partner's share of goodwill. We have made journal entry for capital. We have made journal entry for goodwill of the incoming partner, and for that purpose we have calculated the sacrificing ratio also. That means one set of the solution is over. Now we are asked to prepare the balance sheet of the firm after making all these adjustments. How to prepare it? Very simple. First put the balance sheet, then on the liability side you have to put the partner's capital including the new partner. So what is the capital of Bajaj? What is the balance of capital of Bajaj? How much is that? Partner's capital. Bajaj capital will be 75,000 already given in the old balance sheet plus 21,600. That is a goodwill share credited to Bajaj. So therefore, in the new balance sheet, Bajaj capital will be 96,600. What about Girish? In the balance sheet given to us, his capital was 60,000. Now there is a credit of 10,800 towards the share of goodwill. Therefore, Girish's capital will be 70,800 after admitting the new partner Anil. What about Anil's capital? See, Anil brought 60,000 rupees towards his capital, but against that, his account was debited with 32,400 towards his share of goodwill. So 60,000 minus 32,400 will be Anil's capital. So how I got these numbers? You can see 60 minus 32,400, and in the case of Girish, already 60 is there. 10,800 is share of goodwill should be added, and the case of Bajaj, 75 already given, plus this 21,600 will get you 96,600. So there is change in capital account. Any other liability? Yes, it is given in the problem. Trade payable 60,000, no change in that. We have completed the liability side. Coming to the asset side, very simple. We have sundry assets, no change in that. It is the same as what was given in the balance sheet, 165. Then you will have cash at bank. Cash at bank in the original balance sheet is 30,000, But now Anil has brought 60,000 towards his capital. So therefore, now the balance of cash at bank will be 30,000 plus 60,000, which is 90,000. Now all the other items are clearly put here. You have to check whether the balance sheet tallies. Yes, the balance sheet total comes to 2,55,000. So with this, friends, we have completed the solution for problem number 2 on goodwill. In this problem, as I keep telling you, we have to do the valuation. We have to find the new partner's share of goodwill. We have to make the journal entries, and for the purpose of making journal entry for Anil's share of goodwill, we have to calculate the sacrificing ratio. All that we have done, it's there, and then we have prepared the balance sheet after that. So that's what I told you. Problems like this may get you minimum of 6, maximum of 8 marks, and it's very simple one. So you can try to do these kind of problems in around 10 to 15 minutes in the examination. It's worth doing problems like this and getting full credit for your answer. But as I keep telling you, friends, you need to practice these kind of problems again and again. In a study material, problems like this are given. Go and practice all these problems. Revision test papers are there. Mock tests are there. You have to practice all these problems. Before you go to exam, we should be thorough with some 20 to 30 problems based on these types. Then definitely we can do very well in the examination. Friends, I hope you will follow that. Yeah, friends, in this unit we have seen 6 problems, 4 on basics and introduction to partnership accounts. We have done problems based on P&L appropriation account, preparation of partners capital account, current account. We did one problem on guarantee of minimum profit to a partner. We did a problem on missing figures where the P&L appropriation account and partners capital account is given, but a lot of missing figures are there, just calculation we have done. And then we did 2 problems on goodwill. One was very simple one, just to calculate the goodwill by super profit method. The last one was slightly difficult compared to the earlier ones. We should not only calculate the value of goodwill, but also should do the accounting for goodwill by debiting the incoming partner and crediting the old partner's sacrificing proportion. Subsequent to that, we prepared the balance sheet of the firm after the new partner's admission. So all these problems are very, very good problems, interesting problems. We have tried our best to give what possible adjustment that you can come across in this particular chapter. With this, we come to the end of this session. About the other chapters, we'll see in the upcoming sessions.